How it works, I'll tell you. We have mission number 1, asset number 2 lakh 1, sub number 0. The purchase cost or acquisition values 10 lakh. Accumulated depreciation up to 30th 4. You have seen in the last class, we have posted depreciation up to 30th 4, 3904. Net book value as on 30th 4 is 9,96,096. We sell the asset on 1/5/2020 for 10 lakh 1,000. So there is a profit on asset sale 4904. When you sell the asset on 1/5, the depreciation will be calculated up to 30th 4, 2020 and calculates profit or loss on sale and post to accounts automatically. It can be any date sale, but I want to show you whether the system is calculating correctly or not. For that purpose, I have taken the sale of asset on 1/5/2020. For this one, what steps are required? First step is like this: to make asset retirement field required entry field. For field status group G052, that is accounts for fixed asset retirement. You have seen earlier, for asset sale account, we have used G052. For G052, we specify asset retirement is a required entry field. So the first step in this one is to make fixed asset, we make asset retirement field required entry field for G052 OBC 4. OBC 4. Select field status variant RIL. Double click on field status groups folder. Double click on G052. G052. Double click on asset accounting. Asset retirement, select required entry radio button. Required entry radio button. Select save button, save in your request. Save in your request. You made asset retirement required entry field. Second step, path for asset sale. Accounting, financial accounting, fixed assets. Posting retirement. Retirement with revenue with customer. F-92. F-92. Now you're selling the asset on 1/5/2020. Document date and posting date 1/5/2020. Type DR. Company code RIL. Posting key 01. Posting key 01. Customer account, select customer from drop down menu and enter. enter. Amount 10 lakh 1000. Asset sale. Posting key 50. Account 30102 asset sale account. I'm giving asset sale account 30102. Enter. Amount enter star. Profit center steel. Next plus. From the menu bar, select document, simulate. Now see here, it's stopping here. You can see the marking is stopping here. Is showing fill in the required entry field. Because you pass the entry customer account debit, create to asset sale. Your 1000 assets are there. Which asset you are selling, system doesn't know. So here we have made it required. So compulsory you would select this checkbox. Enter. Asset number 2 lakh 1, sub number 0. Asset number 2 lakh 1, sub number 0. So you're selling this asset. Transaction type T type 210 appears by default. That is nothing but retirement with revenue. We have discussed earlier. See here 210 is coming automatically. 210 stands for retirement with revenue. That is selling for a consideration. Asset value date 1/5/2020. Now we are asking, it's asking, are you selling the full asset or part asset? Suppose you are selling sub part asset. Suppose out of 2 lakh 1 sub number 0, you purchase suppose say 100 chairs. Out of 100 chairs, you are selling 10 chairs. You purchase 100 assets, 100 chairs at a time. You create only one asset master for 100 chairs, quantity 100. Out of 100 chairs, you are selling only 10 assets, 10 chairs. What we do? We give the quantity, partial quantity. It's not possible. We can give the percentage. You are selling 10% of the asset. Both are not possible. Suppose out of 10 lakh worth of asset, you are selling 1 lakh worth of asset, purchase cost of asset. So your partial sale can be quantity or percentage or amount. It can be anything. But in our example, we are selling the complete asset. So select complete retirement, check. Yeah, it's like this. I have 100 shares purchased. What we do? I create only one asset master. In the asset master, I give the quantity 100. You see the asset master. I'll open one more session. I'm purchasing 100 shares. What I do at a time I'm purchasing, I create the asset master like this. Class, furniture fixtures, furniture fixtures. Enter. I give like chairs. I give here quantity 100 numbers. Quantity 100. I'll not create each chair one master. I create only 100 masters at a time. I give the quantity 100. Out of 100 chairs, now I'm selling say 10 chairs. Suppose 100 chairs cost is like this, 10 lakh. Out of 100 chairs cost, I'm selling only 10 chairs. Then what we do? We give the quantity 10. That means out of 100 chairs, you are selling 10 chairs. So it calculates proportionate profit or loss. Suppose it's not possible. Out of 100 chairs, suppose a machine I'm purchasing. Machine have purchased one machine. Out of this one machine, I'm selling 10%, one part I'm selling. The part percentage is 10%. So some part I'm selling. When I sell some part, I'm saying 10% of the part I'm selling 10. Or both are not possible. Out of 10 lakh worth of machine, I'm selling 1 lakh worth of item. Purchase cost. I can give here 1 lakh part. So what I want to say is, when you sell the asset, it can be part asset or full asset. It's a part asset, it can be amount or percentage or quantity. When you sell the full asset, don't give anything. That's why I'm selecting complete retirement. So because sometimes when you sell full asset, sometimes you sell part asset. Anything can happen. Select complete retirement checkbox. Press enter. Now it's showing correct the marked line items. Double click on blue font line item. Blue font line item. Profit center, select steel. Save. From the menu bar, select document display. You have passed 6 line items. Let me reduce the font size. You have passed 2 line items. System is passing 6 line items. You have passed 2 line items. What are the entry you have passed? Customer account debit, credit to asset sale. But system is passing 6 line items. 6 items it's passing. What is the 6 items it's passing? First, let me explain to you. You pass the entry like this. Customer account debit, 10 lakh 1,000, credit to asset sale. This is the entry what you have passed. This is the entry what you have passed. Now what system is passing? Customer account debit, credit to asset sale. What system is passing? When you sell the asset, from the block, the machinery has to be reduced. Because when you're selling asset, the machine will not be there. So credit to machine account, credit to machine number 1, plant and machinery, 10 lakh. When you sell the asset, this asset has to go from the list. This asset has to go from the list. Because you're selling, it should not be there in the books. So create plant and machinery, machine number 1, 10 lakh. Create 75, plant and machinery, machine number 2 lakh 1, sub number 0, 10 lakh. So from the books, the accumulated depreciation also should go. You're sold, so the accumulated depreciation also, what are you calculated up to 30th 4, it should go. When you run the depreciation, you're given credit to accumulate depreciation. Now from the books, it has to go debit to accumulate depreciation. This has to go from the books. Debit to accumulate depreciation 3904. Debit 70, accumulate depreciation, plant and machinery, machine number 2,01,000, sub number 0, 3904. From the books, the value has to go because you're selling the asset, it has to be removed. Debit 100,205, accumulate depreciation, plant and machinery, machine number 2,01,000, sub number 0, 3904, debit. Then debit asset sale 10,01,000. Asset sale you're given credit, debit asset sale 10,01,000. It's coming automatically. Date profit on asset sale 4904, profit on asset sale 4904. Now you're given credit to asset sale. You're given credit to asset sale. Now system is giving debit to asset sale automatically 10,01,000. There's a debit and credit to the same account, automatic. This is what we call contra entry. We are posting to the same account debit as well as credit. You're given credit, the system is giving debit. So it's debiting is a contra entry. Now, if you see this entry, in number of interviews, they're asking this entry, that question, how are the entries the system will pass for the profit for the sale of asset. In normal accounting packages, what we do, we calculate depreciation up to the date of sale, profit or loss on asset sale, and post to accounts manually. In SAP, by using asset sale account, you use asset sale, create asset sale. System is calculating depreciation up to the date of sale. Up to the date of sale, it has calculated. Profit or loss on asset sale, it is calculated profit or loss on asset sale. And post to accounts automatically. I have not calculated. The system has calculated and posted automatically. Asset sale account will have always zero balance. This account will have always zero balance. You give credit, automatic debit will come always zero balance. If I don't do this way, system doesn't do this way. I have to calculate depreciation up to the date of sale. I have to calculate profit or loss. I have to post to accounts manually. By using asset sale account, system is posting to accounts automatically. And always asset sale account will have zero balance. So this is the typical entry that will be passed. So you need not calculate manually. System will calculate and post to accounts automatically. This is the advantage of asset sale account. Earlier we are not discussed. Now we are discussing what is the use of asset sale. So by using asset sale account, the system is passing the profit depreciation up to the date of sale, profit or loss on asset sale, and post to accounts automatically. This only intermediary account. Always this account will have zero balance. Always this account will have zero balance. Zero balance. That's why I told you contra. This way, asset sale entry will be posted.
Sir, what about that 10 lakhs plant and machinery?
Because this it has become zero na. Now when you purchase, what is the entry has passed? When you purchase asset account 70, when you add asset, what is the entry has passed? Let me show you. Now this is 10 lakh is there na. Now see here the entry what it has passed when you purchase. For your purchase, yeah. When you purchase, what is the entry you passed? Debit plant and machinery 10 lakh. So now you sold, that has to go credit to plant and machinery. On the books it has to go na.
Yeah.
The same way depreciation. When you run the depreciation, what the entry has passed? See the entry. But here two assets are there. Let me show you the entry. Value will show separately. Two assets are there. because these are two assets value. I'll take only one asset. In the last class, you have seen the asset wise. See here, what the entity has passed when you run the depreciation, credit to accumulated depreciation. That is now debit to accumulated depreciation. From the books, it has to go. Now, what the depreciation amount see here for this asset? In the last class, you have seen. Depreciation posted. For this asset, we'll take for this asset 2 lakh 1 only. What the amount you posted for this asset? 3904. What the entry you posted in the last class? Credit to accumulated depreciation 39040 for this asset. Now this depreciation also has to be debited. Earlier you have given credit, now it is giving debit. So from the books, the values will go.
Okay, sir. Thank you.
Yeah, thank you. In normal accounting, we calculate manually and post. In SAP, system is doing automatically. Because it can be any date sale. Because to show you whether it's calculating correctly or not, that's why I've taken the month end values and sale on 1/5. When you make sale on 1/5, up to 30th for 20, depreciation has to be calculated. Like this, the entry will be passed automatically. In number of entries, they're asking the entry for depreciation asset sale. You're passing 2 line items, system is passing 6 line items automatically. Entry is clear? Now I have shown you how the system is calculating and posting to accounts, whether it's calculating correctly or not. I made an asset sale on 1/5. The asset sale can be any date. Now suppose the asset is sold on 20th May instead of 1/5, 20th May in the middle of the year, any date. Then how it takes? Suppose it's like this. I'm taking some approximate values. Suppose the asset 2 lakh 1, sub number 0, machine number, purchase cost is 10 lakh. What system will do? System will consider depreciation. You're selling on 20th May. So it considers what would be the depreciation up to 19/5. Because you're selling on 20th May means up to 19/5. You're selling today means up to yesterday. It should consider the depreciation. Up to 19/5, the depreciation is suppose say 7,000. I'm taking some approximate value. Now every day you will not run the depreciation, and every asset sale you will not run the depreciation. So when you run depreciation only, it posts. It will not, otherwise it will not post. Even though you don't post depreciation, system considers what would be the depreciation up to the date of sale. Then net book value is this much amount. Now the asset sale is 10 lakh 1,000. Now there is a profit on asset sale. And how it works? Suppose presentation in accounts is like this. Presentation in accounts is like this. Suppose you've seen yesterday you run the depreciation on 30th for this asset. I'm talking only this asset. Debit depreciation, credit accumulated depreciation, plant and machinery. Yesterday you've seen the entry. Now you're selling the asset on 20th 5. When you sell on 20th 5, you'll not run the depreciation. You run the depreciation after the month end or after the year end. I told you in the after the year end, once audit is over. But when you sell the asset, even though you don't run, system considers what would be the depreciation up to the date of sale. So while calculating profit or loss, it considers what would be the what would be the depreciation, what would be the depreciation for this asset up to the date of sale. Suppose up to the date of sale, 7,000 is the depreciation. So what system will do? Here it will do like this. Accumulated depreciation on 20th 5, 7,000 debit. Because from the books it has to go. 7,000 whatever I shown. Then it calculates profit or loss and posts to the accounts. Then I run the depreciation after the month end or year end. After the month end or year end. See here, suppose I'm running after the month end 31/5. For this asset, it calculates depreciation up to 19.5 only, because this asset was there up to 19.5. I'm talking about only this asset. It posts after the month end means 31/5/2020. After the year end means 31st March 2021. For this asset, though it's calculating up to 19.5, it posts on 31/5/3096/3096. So by doing this way, what happens? The depreciation, total depreciation for this asset is 7,000 credit. Now there is a debit 7,000, balance is 0. So what I want to say is, whether you run the depreciation or not, for asset sale, it considers the depreciation up to the date of sale. Up to the date of sale. You need not run and post the accounts profit or loss. When you run the depreciation will be considered till the date of sale, till the date of sale. And it posts to the accounts after the month end or after the year end. This way it works in accounts. Because even now you'll say, we are not on the depreciation, why it has take 7,000? Why you should not take 3904? Though you are not run, but when you run after the month end or year end, for this asset, it takes only depreciation up to 19.5. Though it posts on 31.5, depreciation will be taken up to 19.5 and post the entries so that the profit or loss is correct. Profit or loss is correct. Otherwise, if it takes 3904, this profit or loss is wrong. So what I want to say is, whether you run the depreciation or not, when you sell the asset, the depreciation will be considered up to the date of sale. Then profit or loss will be posted to accounts. Always asset sale account will have 0 balance. This way, the asset sale will take place. Any date you can sell, anytime you can sell. I've taken only for this asset how it works. So when you want test, you can test and you can create a new asset and test like this. Now we have seen asset sale. Now we'll go for asset transfer. In Hyderabad unit steel profit center, we have asset 202 sub number 0 machine number 2. This we want to transfer to Bangalore unit steel 1 profit center. We want to transfer from Hyderabad steel profit center to Bangalore steel 1 profit center within company code, the same company code. When you transfer from one unit to another unit or one department to another department, you have to transfer at cost. You should not transfer at profit. Within company code, there should not be any profit. And you transfer acquisition value as well as accumulated depreciation. Both should be transferred. You should not transfer net book value. Up to the date of transfer, depreciation will be calculated in sending unit books. Suppose you are sending from Hyderabad, we are transferring today. Up to yesterday, it calculates in Hyderabad books. From the date of transfer, the depreciation will be calculated in receiving unit books. From today onwards, the depreciation will be calculated in Bangalore. So here you have to transfer at cost, not with profit. For asset transfer, SAP is given two methods. Two-step method. That means you create asset master in Bangalore unit. Then transfer values from Hyderabad to Bangalore. One-step method. Here you create the asset master and transfer. Both will be done in one screen. In one screen, ABUMN. So for this one, what steps are required? So earlier case, you have sold the asset. Now you are transferring the asset. When you transfer, you should not transfer at profit. You transfer at cost. You transfer the purchase cost as well as accumulated depreciation up to yesterday. What steps are required? Earlier we have created steel and cement in Hyderabad. I am creating one profit center steel 1 in Bangalore. Creation of profit center steel 1 in Bangalore. Any name? KE51. KE51. Profit center steel 1. Copy from profit center steel. I'm copying steel and creating steel 1. Any name, only text field. Controlling area RIL, enter. Analysis period 1/4/2020. Name steel 1, long text, profit center steel 1. Segment, select RLB Bangalore segment. Select activate button. Now you have created in Bangalore unit steel 1 profit center. Now I'm creating cost center department B because we have created A in Hyderabad. I use B. Creation of cost center department B, KS01. Give the cost center department B. Reference cost center department A, controlling area RAL, enter. Enter. Change the name to department B, cost center department B. Profit center steel 1. So department B you're creating in Bangalore unit, cost center. Save. Third step, path for asset transfer. Accounting, financial accounting, fixed assets, posting. Accounting, financial accounting, fixed assets, posting. Transfer within company code. Transfer within company code. Company code RIL, enter. Okay. Next, select asset 2 lakh to sub number 0. 2 lakh to sub number 0. Document date, posting date, asset value date, today's date. Any date you can do. Asset transfer. Suppose if I go for two-step method, in AS01, you have to create the asset master. Now you have to give that asset master here, existing asset, save. That is two-step method. In AS01, create a master. Whatever number it comes, give the number here. It transfers the value from this asset to this asset. Now, we want to go for single step method. That means you want to create the master and transfer the values. In that case, select new asset radio button. Give the description. Suppose for Bangalore, this is machine number 11. Any number. Already they have 10 machines. This is machine number 11. Any number. Asset class, select RL 2001, Department B. Cost center, Department B. Select master data button. Select additional data button. Capitalized on today's date. Today's date. Select depreciation areas tab. Here you can give any key, whatever key you want, you can give. Already same key you have given, everything is coming. For 01 and 30, useful life 16 years, period 2 months, ordinary depreciation started, today's date. Any period, anything. Yes. Period 2 months, ordinary depreciation started, today's date. 16. Any date. Select back arrow, enter. Enter. Select save button, enter. When you select save button, see here, it's showing the document is posted with 46. The asset number is 2,03,000, sub number 0. That means it has created an asset in Bangalore and also transfer the values. That is the advantage. In one step, we create an asset master for Bangalore. Then we are transferring the values with the document number 46. Enter, I told you, enter. Now we'll see the entry, whatever is posted to view the document posted FB03. Now we give the document number 46 we have got, I give 46. FB03. FB03. 46 it has generated 46. Enter. See here. Today's date is posted in Hyderabad books, Hyderabad segment, Steel Profit Center, create plant and machinery, asset number 2,02,000. Plant and machinery, create asset number 2,02,000. 100,205 accumulated depreciation. 100,205 accumulated depreciation debit in Hyderabad. Hyderabad unit, the accumulated depreciation debited, plant and machinery is created. From the block it goes. This takes the value up to the date of transfer. The cost will be taken. You can see the cost is taken. Cost is taken. In Bangalore, plant and machinery is debited. Steel 1, Bangalore books. Steel 1, Bangalore books. Plant and machinery is debited. Accumulated depreciation, plant and machinery. Accumulated depreciation, plant and machinery. Steel 1, Bangalore books. Accumulated depreciation, Bangalore books. Bangalore 2,03,000, sub number 0 up to the date of transfer. So like this, the system will not calculate profit or loss. It transfers cost and accumulated depreciation also. Both will be transferred from Hyderabad to Bangalore. This way, asset transfer takes place. Now, when we use this two-step method, when we want to transfer number of assets at a time. You have seen here, I can transfer only one asset. Let me go to the screen. Yeah, you can see here only one asset I can transfer. But you want to transfer 10 assets at a time. Then in that case, you cannot go for single step method. You have to go for two-step method. What do? You have to create 10 assets in AS01 for Bangalore. Then what do? You have to select here multiple assets. Here you have to give Hyderabad all the 10 assets. Here you have to give Bangalore all the 10 assets. So when you want to transfer number of assets at a time, you have to go for two-step method. Second case, where asset transfer is to be created as a subasset in receiving unit books. Now you've seen when you're transferred, it has taken 2,03,000 sub number 0 as a main asset. Now you want to transfer this item as a subasset in Bangalore. So when you create a single step method, always creates a only main asset. It will not create the subasset. So then what do? You have to create first subasset master in Bangalore, then transfer the values. So in these two cases, the two-step method is required, not single step method. Because when you go for single step method, always it creates a main asset, not as a subasset. These two cases, we have to go for two-step method. Then we go for asset scrapping. What is this asset scrapping? Generally, practically, we never scrap the asset. Because when you sell, you get minimum 1 rupee. When you get minimum 1 rupee, that is a sale, not scrapping. But SAP has given the facility. What is this asset scrapping? How it works? In Hyderabad, we have asset 2,02,000 sub number 1 motor. This asset cannot be used because the main asset already transferred to Bangalore. It cannot be sold. You cannot sell in the market this asset. It cannot be transferred. Bangalore already they have motor is there. They don't want this motor. I'm giving the example. It never happens. Scrap the sub-asset. Scrap this asset. Net book value on the date of scrapping will be transferred to P&L account as a loss. Whatever net book value is there on the date of scrapping will be transferred to P&L account as a loss. This asset scrapping can be used for impairment of assets as per AS 18, Indian Accounting Standard 18. What is this impairment of assets? It's like this. Where the realizable value is less than the net book value. So suppose it's like this. I'm giving an example. Your purchase cost is 75,000. Your accumulated depreciation up to 31st December is 401. Your net book value is 74,599. Suppose I'm giving an example. Your realizable value is 70,000. That means your realizable value is less than net book value. This is less than net book value. Your net book value is 74,599. If you sell in the market, you did not sell. If you sell in the market, we are going to get only this much. So this is the first condition. It is satisfied. And future cash flows are negative. Suppose you prepared a budget. You are saying next 4 years cash loss, there is a cash loss, not profit. So when there is a cash loss, cash flows are negative. Impair the asset value. What is this impair the asset value? Bring down the net book value to realizable value. Now suppose it's like this. Now your net book value is 74,599. If you sell in the asset in the market, we get only 70,000. Then you prepare the budget for next 3 years, expecting cash losses. You're expecting cash losses, not net loss. Then bring down the net book value to realizable value. What is the net book value? 74,599. What is the realizable value? Only 70,000. 4,599, you reduce the value. That is called impairment. Reduce the value. When you reduce the value, the book value will be now 70,000. This is standard 18, AS18, impairment of assets. But practically nobody will do. But as this is the accounting standard, in SAP we can do like this. This is nothing but partial scrapping. You are scrapping 4599 for scrapping. So how to scrap the asset? The values we'll see. First step in this one, to check the motor value as on 31/12/2020. We'll see and we scrap the asset. Already you know the path. I'm using the transaction code S_ALR_87011965. This is a code already you have discussed. You've seen earlier this report. Company code RIL. Report date 31/12/2020. Report date 31/12/2020. Select list assets radio button. Select execute button. Now you can see here motor value. The purchase cost is 75,000. On 31/12, your accumulated depreciation is 1983. Net book value this much. Any value 75,000. Accumulated depreciation 1983. Net book value 73017. This is the value on 31/12/2020. Now this asset you are scrapping. Only to check. Next path for asset scrapping. Accounting, financial accounting, fixed assets. Because I want to show you whether the scrapping value, net value is like this or not. I want to show you. You can sell, you can scrap any day. Accounting, financial accounting, fixed assets. Posting, retirement. Asset retirement by scrapping. Company code RIL. Give the asset 2 lakh sub number 1. 2 lakh to sub number 1. This you are scrapping. Document date, posting date, asset value date 1/1/2021. Asset scrapping. If you want to go for partial scrapping, you can select here. You can give percentage or amount or the fixed value or quantity. You can give whatever you want. You want to give, you can do. You can give amount or percentage or quantity. Now I'm scrapping complete asset motor. Save. Save. See here, it is giving error message. What is the error message? See here, document number from general ledger document could not be determined. What is this one? I'll tell you. Here, remember, for non-leading ledger, we have given accounting year January to December. January 21, I'm giving 1/1/2021. In which year it comes? In the fiscal year 2021 it comes. If you see the error, if you click on the error message, you can see here, give the document numbers. See here is showing for non-leading ledger RA for 68. Give the number in interval for 2021. Because the reason is we are given for 2020, not 21. But you are scrapping on 1/1/2021, which is coming in fiscal year 2021. What do? When you get the error message, click on here. Document numbers for general ledger accounting. You see here for RIL, change intervals. Earlier you're given 68. For 2020 you're given, we give for 2021. 68, 2021. 8 lakh 1 to 69 lakh. Any number. Save. Save. Now document is posted with 47. Here I have already given the note error message. Reading non-read ledger fiscal year 2021 is not given. Already I told you already what is to be done. Already you are done. Now to view the document posted, we'll see the document posted. See the entry. I'll take this way, FB03. See the entry. When you scrap the asset from the books, the machine has to go 2 lakh 10, 2 lakh 2, sub number 1, motor crate. The asset has to go from the books. Plant and machinery, it is going from the books. Debit accumulated depreciation, debit accumulated depreciation, accumulated depreciation, plant and machinery 1983. Depreciation up to the date of scrapping is up to 31st December is 1983. 1983 because this is the value I have taken. If you see here 1983, we have seen the entry in the report. You have seen 1983. Last due to scrapping is 73017. 73017. So what are net book values there? You have scrapped, that is a charge to P&L account, charge to P&L account, charge to P&L account. So the system will calculate and post the accounts like this. Now for this asset, you have seen the scrapping entry. When we run the depreciation in the year end or month end, the depreciation it will be like this: depreciation account debit, credit to accumulated depreciation, plant and machinery. So the depreciation, how much will come? 1983 will come. So that 1983 will be accumulated depreciation 1983. So it will be 0. Because there is a debit to 1983, credit to 1983, it will be 0. Like this, the system will calculate and post the accounts automatically. This is the depreciation up to the date of scrapping. So now the continuation, capital work in progress, line item settlement will take up in tomorrow's session. Okay, thank you very much.